Greetings, ladies and gentlemen. This is Houston Trong from thetradingedge.org, and here's your weekly market outlook for February the 3rd to the 7th, 2020. So if you rewind and watch last week's video, I did express that we were in for a volatile week, and we sure got that in this last trading week of January. So I did say buckle up, and it was a volatile ride. It certainly wasn't the way that a lot of people thought that the month was going to end based upon how it started. If you recall, January was basically a continuation of the prior couple months, November, December, and it was trading straight up momentum. Then approximately 2 weeks ago, I warned about the poor market structure that the market was leaving behind, as at one point, about 2 weeks ago, all the time frames that we examined had gone momentum up, right? From the 4-hour chart to the daily chart to the weekly chart to the monthly chart, they had all gone momentum up. And so when you have that condition, it's usually a dangerous situation because it causes people to get overextended, over leveraged, and any small pullback will cause deeper retracements, taking out that poor market structure. So this past week, we had a mixture of both some global scares in terms of the coronavirus outbreak. There was some econ news that was in play, specifically the Fed news. Then we had a number of earnings reports. The majority of them, the big names anyways, except for Facebook, they all pretty much were in line or did better than expected. Thinking of Netflix, thinking of Apple, and thinking of Intel. But it shows you that the market was ready to pull back, because even with all that good news, the market was not able to shrug off the fears around the coronavirus that caused the markets to gap down on Monday. And we'll talk about the price action in a few moments. But moving forward now, we're now into a new trading month. February 3rd is the first trading week of the month. Obviously, the first week of February, and so for this first week of February, it becomes very, very important because number one, the monthly time frames we'll have to see how price transacts around that monthly opening day, opening week, opening month, and then we'll also want to see whether or not the recent lows, that is January's lows, do we still hold above that? And you'll see later on in the video that a number of indices, a number of instruments have left some ominous candlestick patterns, and that could leave us open to a larger retracement. Again, I always hesitate to over exaggerate things. Again, a pullback in an uptrend is it has been they have all been buyable, and even a 10% pullback is something healthy in a bull market. So even if we correct 10%, as we did multiple times in 2019, you may have forgotten that already because the 2019 ended so strong. But in 2019, we had 2 or 3 roughly 10% pullbacks that were quickly bought up again. So is this another one of those pullbacks? We'll talk about that shortly. So let's talk about the Econ Calendar, and let's talk about the earnings calendar. So Econ Calendar, so this coming week, got the ISM number on Monday at 10 a.m. February, we have the oil number. Again, the oil has been getting hit, and we'll see some of the charts in that sector later, and let's see if it continues to melt downwards, or do we get a bit of a bump in the current selling trend. Jobs claims on Thursday at 8:30, and the employment situation on Friday. So, in terms of the earnings calendar, very busy earnings week. So this is going to trump the Econ Calendar. But first off, on Monday, what you want to be paying attention to is obviously some of the the rest of the FANG names. So we already had Facebook, Amazon. Sorry, I forgot Amazon. Did not mention it earlier, but obviously Amazon had the big blowout numbers that caused it to gap up big on Friday. Netflix came out already. Now we got Google on Monday. So everyone's watching for Google on Monday after the bell. And we have a few other kind of high beta names on Monday, but again, just be aware of those if you're trading a lot of stocks, and be aware of your earnings risk. Then on Tuesday, Lots of interesting names reporting. Snap, because that one basically, I think, nearly doubled in, I think actually more than doubled in 2019. So let's see how they continue to do. Disney reporting as well, so a lot of eyeballs on Disney. Match.com, see how that does. And STX, so Seagate Tech, high beta name, want to see how that reports. On Wednesday, we got a lot of companies. QCOM, Twilo, which is the one I'll talk about later on, TWLO that is. FireEye, another high-tech beta name, has been working really well, or had been working really well. Spot, again, another strong name. And of course, Sono, another fun beta name to trade, high beta name to trade. Thursday, we got that's the most companies reporting is on Thursday. Twitter, Uber, ATVI, Wynn Resorts with the coronavirus. And let's see how, obviously earnings are lagging the current news cycle, but curious to see what the stock does after this recent pullback in Wynn. And we've got Pinterest as well on Thursday. And then Friday, the one that I'm looking for is Goose. So Canada Goose, I'm a Canadian, that's a Canadian company. Curious to see how Goose responds in terms of earnings, because their stock has been getting really, really decimated, which is unusual going into earnings. So very curious now, does this current slide continue, or does this, do the earnings, do they really crush on earnings and cause the stock to bounce back up again? So curious to see how that plays out. So let's jump into the charts now. And of course, we got to keep your eye out now for anything related to the coronavirus. So if you're, an amateur epidemiologist, easy for me to say, then you've been busy going through all the stats and combing through that to see, how far this virus can spread and how quickly it will spread and become even a bigger or smaller story. So with that out of the way, let's launch into the price charts now and talk a bit about the week that was, because it was an interesting week in terms of price action, and then it did leave some clues around where we could go next. So let's start with our friend the VIX, and then the rest of the charts, if you haven't been here before, they kind of look like the same, but the mirror opposite, okay? So right now the VIX, let's start here. So let's zoom into the monthly chart. So it's the first time in a while that we had a green month, okay? So look, January actually closed green. We had spent time below December's lows, but obviously the past couple weeks have caused the VIX to pop up, and we're actually closing on a green month. First time in a while, right? Look, 1, 2, 3, 4, 5 months ago, back in August, we also had a green month on the VIX product. So it's been a while. Kind of looks like this, doesn't it? So if you zoom back here, I'll zoom in here a bit now. There. Guess what month that is? January. Yes, correct. January of 2018. So leaves a similar type of shadow here, right? So showing excess. So showing the buyers pulling it up, right? So buyers buying it up, bidding it up, and just like we had in January last year. So now, if we break above this high, that will actually be a reversal. So let's paint this in here now, just so we can watch it. We break above January's highs. I'm going to change that color to orange. Let's grab my color chart here, snag that over to orange. We break above that, that'll be reversal on the monthly chart, and then you may have a similar situation you had in 2018. Recall, this was a massive move on the VIX product, 48%. Not unlike we had, that was the year there, 2018. That was the VIX Armageddon. So it caused that thing to spike up. So that's the thing that caused the XIV to basically to disappear in terms of that product. So now we got the green bar in the month. Let's talk about the week now. So let's go to the weekly chart here. Okay, so with the last 2 weeks, we had outside bar last week, right? And the question was, if you recall this bar, I said, okay, what happens after this outside bar? Do we go outside bar up, outside inside, or outside down? It went outside up, right? So that's what we were looking for, that condition, which way it was going to break. It was a gap up on Monday, so it was very clear which way it broke. It was actually a gap up, and it broke above the prior week's high. And that creates the momentum up condition, because anyone who got short in here, right, who short in this sequence, right in there, anyone down here, if you don't cover up here, you got squeezed on, right? So if you didn't cover as soon as it popped up on Monday or somewhere in that week, they try to close it at the highs of the week, right? So they really squeeze the folks who were short the VIX products on Friday. So now the question again is, what's the next bar? It's very simple. Once you get used to the price action, is always asking, what's the next bar going to be? And Essentially, we want to see how he traded on these ranges. So can we break above this prior week's range? Right? So if we break above this high, we continue the momentum up condition. Momentum is up until we get a lower low. So we're watching these two sides of the range now. It breaks back below here again, and it keeps going. We're going to go out the other side, right? And back to these recent lows. Otherwise, we can come ripping back through the range here, especially on momentum. If the fears continue, and there's reason to believe that it may, because of course, the Chinese markets have been closed for the past couple weeks, both for the Lunar New Year, but as well because they closed it because of the virus. So now, when the markets open on Monday, which I believe it's still scheduled to do so, we could see some panic selling, and that may again cause some spillover into the North American equities markets. So let's wait and see what we get out of this, and that may cause momentum to continue in the short term or even the midterm on the VIX product. Okay, so on the weekly chart, that's what it looks like. And the daily, here's the context, right? So that's very clean. This is why it's nice to see some on the higher time frame charts, because you only have one bar, right? You only have to think of one bar, and it's more difficult to get the emotions kind of boiling when you're looking at a weekly bar. People get very emotional though when they start to look at the daily bars and the lower time frame bars, and you oftentimes lose the forest in the trees. So let's talk about the week that was. And it was a bit of a tricky week, right? It was a bit tricky because you had some time frame misalignment, and they did not make it easy for you to be short. So even though being short was the right thing to do, they didn't make it easy to be short, because the price the price action we had was actually quite choppy, even though volatile, because we had earnings within this past week, right? So we had a number of good news flow items that caused the markets to gap up, or some markets to gap up, but then ultimately fade back again. So let's talk about the daily chart here. Remember last Friday I said, all right, how do we break this next bar, the daily chart? Okay, so it goes, which way does it go? We now know it gapped up, right? So the equities market gapped down. So as soon as it gaps up, that's momentum up, right? So that's a momentum move to the upside. So they go up, so that's a momentum move. On Tuesday, Wednesday, they faded it, right? So they faded it because we had a number of good useful events, right? So Intel and some of these other earnings names had come out, and Apple had come out as well. So, all right, sorry, I said Intel, but I meant AMD. So we had AMD and Apple on that Tuesday reporting, and of course, we had Microsoft, because there were so many names this past week to be watching. So Microsoft reported on Wednesday after the bell. There was Facebook and Tesla as well. So there was so much stuff going on in terms of earnings that we actually had, on the VIX anyways, a gap to the downside, right? So we actually opened up high and then it faded it. So here's your Monday, Tuesday, Wednesday, then Thursday, Friday. And so price action wise, gaps up, pulls back in, and then on Friday, things took off again. And so this was a kind of a fake out on Thursday, because there was a World Health Organization press conference that made it appear that things were a lot more in control, or things were a lot more under control than perhaps they actually were. They, the WHO basically commended China for their current efforts, and so the markets took that as a sort of a sign of relief, and they let some of the pressure off that selling valve. So that's when the VIX basically pulled back in again, and had and it's kind of hard, because if you're short in this sequence and you have this situation here where it pops up, but all of a sudden it comes all the way back against you there, that scared out a lot of shorts. So here a lot of folks had to cover, and then ultimately we popped back up again on Friday, and we had a really weak close on equities. So definitely a bit of a trickier week on some indices more than others, and we'll talk about that more in a few moments here. But that's essentially the same pattern across all of them, right? So you have a gap up, a pullback, and then the continuation move. So classic, A, B, C type of move. Okay. Now I'm just going to draw one thing in here really quickly. So the weekly chart, just to make that really apparent, because I moved our lines already. But here, this is what you can really watch for. And once you see, good at seeing these things when the markets are closed, then it's very, then it gets better. Then it becomes an easier task to do in real time. So this purple line, that was the prior week's high. Okay, so this is the prior week's high. So it gaps up and it pulls back down, and where does it find support? Right here at the prior week's high. You could also say, yeah, that's the 8 period and that's your 20 period moving average. But that's your confluence of signals in that area right there. All right, so these are your classic move, impulse move, right? Pullback and then extension. So ABC type of move. And your buying signal on the daily time frame would be a break above this high. Okay, so the tricky thing here is that it actually opened up here, right? So had you bought it right there, you're buying it as it comes back in through the range. It's a little bit dangerous. So that's the reality of trading, is that if you put your buy order here, or your buy order here, you'd rather see that signal filled on the way up versus having the signal fill on the way down, because once you get filled on the way down, you're not so sure you actually want to be in that trade anymore, right? So this case here, they did hold the lows, so it did not break through the other side, although it could have done so. Maybe had the market had more time, because that press conference was in the late afternoon, maybe it could have come through the other side, but it did not, right? And so on Friday, it came back up. Anyone who bought the VIX or sold the equities, the opposite trade, and their stops did not get violated down here, then they were in good shape to hold through this move on Friday. Right, so that was the nature of that pullback sequence. So let's talk about SPY now and see what that looks like. So SPY, Qs, and Dow look very, very remarkably similar. So now we can kind of fast forward through some of these indices. So I'll do the monthly chart on these three because they're nearly identical. They basically all show the same pattern on the monthly chart. Momentum up. So here, outside, up, up, up. But here now, look at the SPY. As I mentioned before, here now we actually have a shooting star happening on the SPY. So this is a bit of a dangerous, kind of ominous bar, because if we break below there, this shows clear signs of excess supply, right? So people have come in, sold it off now, and clearly the sellers are in control. We break below this month's low, we can come back through the range again, easily go after that pivot there. Now, even if we go after that pivot, again, this is not Armageddon we're talking about here, but this could be a decent pullback. So from there to there, we already had just from the top of January to here, we're already down 3.78%. We go over to him here to the bottom of December's bar. Now we're down to a -7 3/4% retracement. Okay, so that's would be definitely in line with what a typical pullback looks like, and it doesn't mean that the uptrend's broken. It doesn't even mean the world's ending. It's just the nature of price to pull back like that in a healthy uptrend. Because look at the monthly chart. Even if you pull back to this level here, even in here, 10% somewhere in here, you're still in an uptrend. It's hard to negate that uptrend with one single bar. The last time we had a shooting star like this was a similar one. You could say it's sort of a shooting star, although did not close red, but it did leave a large excess candle here. And you can see what happened the next month. So from here, this next month, it came from there down to there. Whoops, wrong charting tool. Went from there, from the top end to there, and that was a close to 6.75% move. If we actually just count the lows of that, it was a 4.3% correction. So if we do the same thing over here, from this area here down to the bottom of this bar's low, it'd be a 4% retracement from where we are now. So not a really it's certainly will stop at a lot of people, but by no means is that a really strong pullback. So maybe it goes back further. We'll see where it goes from there. But just watch out for the monthly lows now, because this, if it does happen, it is turning over a higher time frame. It's causing a reversal on a higher time frame. Well, one more time frame to look at, and that's the 3-month chart. Okay, so this is why it's not a major reversal. Yes, it is a significant reversal if it goes to the downside on February, but it's not a major reversal. What makes a major reversal? When you can break below the quarterly time frames lows. Okay, so in order for this thing to be a major reversal, you have to take out that low there. Okay, so this low here is way down there. From where we're trading at now to here is close to 11.5%. So why does it have to go all the way down here? Well, because there's stops down here, right? So this is why if you can break below these levels, this will trigger a number of longer term traders and folks who are looking at the trend, and they're going to be on the selling side. This will cause people to cover their longs and to go short, and this will then cause a larger reversal. The last time we had a break below a prior quarter's lows was back here, July 2018, and this was a pretty scary. Remember, that's a pretty scary quarter. This is the quarter where basically we saw that selling happen in December. It looked like, for a while there that the things were kind of falling apart until they bought right back again in January of 2019, if you recall that. So you kind of have to go back in time here, right? And before you can have another one of those situations way back here, October 2015, and they bought it back right away, right? But that's what has to happen here now. If we end Q1 and still looks like this or looks something like that, then there's a better chance of it going reversing. But right now, because it's still Q1 and you still have 2 more months in this bar, the only way you can make a reversal happen, a reversal means you're taking out the prior bar's low, is you got to go all the way down there. And that's not realistic unless you see a 11.5% move. And that's not in the cards yet. It's too early to call for that type of size magnitude reversal. So for now, we'll leave it at that. Outside bar up, waiting to see if there's a reversal on the monthly chart. On the weekly, it did extinguish that weekly momentum. Look, outside bar up. We got it this week. Finally, that momentum, got extinguished right there on the gap down the SPY on the Monday. We had a ton of gaps, right? I was saying, this is poor market structure because there's a lot of gaps and you have a bunch of momentum moves. So anytime you see price action like this is very, very shaky price action because it's filled with gaps and because we know people are chasing. Anytime you have an outside bar up situation like that, that's chasing. People are weak longs. They're just chasing profits, potential profits. And look what happens here, right? And I think it'll become more apparent when we look at maybe the Dow chart. But yeah, I'll give you the story on the Dow chart instead of the SPY chart. But here, people are sacrificing trade location to get profits. They're overextended, they're over leveraged, and these are the kind of pullbacks you can expect. Pull back, you stop out everyone. See this drop down on Monday? This here wipes out anyone in here, right? Because we had that unfilled gap drawn right there last week or last couple weeks, and we know that any kind of pullback, they're going to stop out all the week longs. So had you gotten long the prior 2 weeks, going all the way back to the beginning of second week of January, you would have been stopped out on the SPY anyways, right? Because took them all out. And then a little bit extra for good measure, right? So here, exact same pattern as the VIX product, but in reverse now. Outside bar down, pulls back up again, and then there's a reverse scenario. Your pullback and then your continuation. Again, as I said before, a little tricky on the SPY, even trickier on the Qs. We'll see that in a few moments here. But that's the nature of the game. Because here, it gaps down, comes back up and fills that gap. Getting filled here, you're taking a lot of heat going into Friday, right? So you'll see here, let's just do this. So right now, on the 2-day chart, let's just show that before I move on. Here's what we can expect for the next week. So the 2-day chart for the SPY, yeah. So actually, there's I'll save that. I'll save the 2-day chart until we get to the Qs. Yeah. So let's talk about this 4-hour chart for a second here, because it is a little bit tricky. Yeah, it's a little tricky. So, as I already explained on the VIX chart, here is your short signal, right? So when it breaks below this prior bar's low, that's your Wednesday. That happened on Thursday. Unfortunately, it gaps down and comes up again. So here, you get short in this sequence when it comes up again, and you're really hoping it doesn't stop you out, because your stop's going to be either here or there, and you're really hoping that it doesn't take you out. It didn't. It came close though. If you looked at this 60-minute chart, they had a lot of strength right into the end of the close. So here, there's your Thursday, right? So here, look those final 3 bars. You're short in this sequence here, right? You get filled down here, and now the final hour of Thursday, it looks like it's going to come right through and stop you out. Or on Friday, it looks like it's going to come stop you out. But price held. That's the way it is. Price held, and the sellers, congratulations, you held through that steep pullback, and you were rewarded by taking the correct actions there. Okay. So let's talk about the Qs now. So on to Qs. Same story for the monthly chart. Momentum up. Momentum has not been extinguished yet. Look on the Qs, because of all the strong tech names, i.e. Apple, i.e. Netflix, i.e. Microsoft, etc., we still have a nice green month for the Qs, up 3%. The sellers have to break below this month's lows to put this momentum in jeopardy. It's still momentum up on the monthly chart. Okay, we did finally extinguish that momentum on the weekly, like I said already, with SPY. And once you broke below that weekly low there, the prior weekly's low, we got that here on the daily chart with that gap down on Tuesday. We drew that gap last week or 2 weeks ago. Look at that. Outside bar down, that Monday took all that gap, right? So that was your cycle low there. Low 217.18. The gap was 217.15, right? So you can't really make, that's, it came very, very close. They couldn't quite take it out. It came very close though. Close here. Yeah, 217.15. So it came really close to not quite do it. So the bears, I'm sure, were very, very frustrated because anyone who held for that gap fill, it didn't get filled. So then you probably had to cover somewhere higher, because then you were worried that it might turn green on the week, and who knows, it could have gone back up here again had earnings been even more exceptional. There was no coronavirus scares. This thing probably could have popped up and we could have made all-time highs. But it is what it is. But the Qs did not make it easy for the shorts, just like the SPY and the VIX, because on the Q chart, let's take a look at here. Well, here in the Q chart, this is what we see now, right? So on Friday, this is the hard part. Had you gone short on the Qs, right there? So had you gone short on the Qs there, just like the SPY, you did not get stopped out on Thursday, you got stopped out on Friday. That's the challenging part here, is that the Qs, because of the strong earnings from a number of those tech companies, it did create a higher high. Okay, so this high would have stopped out anyone who got short in this sequence here and put their stops nearby. But for the rest of the day, it did sell off. So it gaps up, right? They sell it off because we're back to the range again, creating the outside bar. So now we have that outside bar scenario. What's the next bar? Just like we had last Friday, right? We're asking, what's the next bar going to be? We want to know now, which way that outside bar is going to resolve. So now we're going to redraw our ranges. You want to see which way it breaks, okay? Which way does it break there? Okay, so the low of this past week was 217.18. We said that already. So that's this scenario on the daily chart. On the 2-day chart, we have the same thing. Outside bar on the 2-day chart. So exact same scenario again. We want to be seeing what's the next bar out after this outside bar, because that will give us a lot more information than we have now. Because you cannot make your decision on simply one bar. It's not enough, and we've talked about that many times before. Especially on an outside bar, it's not significant in and of itself. So on the 4-hour chart, we already explained this bit on the SPY, but here's a tricky scenario. Okay, so there, outside inside on Wednesday. If you go short here, you don't get filled until it comes back up on you, right? So it opens down here, it comes up, and then you get squeezed on Thursday. Then on Friday, gaps up, and then you put your stop anywhere here, you get stopped out, and then it makes the move, right? So very, very tricky situation there with the Qs because of all the earnings names reporting that were healthy. So that was tricky sequence, because look at the 60-minute chart there on the Qs, right? They gap up, they force anyone who got short here to cover, because who knows, it could have gone higher, right? That was one possibility, because you were trading above the weekly open, right? Don't forget, the week did close green, right? It's still closed green right there. There's your weekly green week. All right, so. Oh, sorry, I'm on the wrong chart here. On the 60-minute, but it's momentum to the downside, right? So it goes outside bar, taking it everyone who got long on that good news that we had on Thursday after that WHO organization announcement, press conference, and it was outside bar down, okay, and closing close to the lows. So there's your price action now for the Qs, and now got momentum. Okay, so here on the 4-hour chart, momentum and down. So in the lower time frame chart, on the 4-hour, we're already seeing a momentum down condition. We're waiting to see what the daily and the 2-day gives us by seeing what that next bar is going to be after the current outside bar. Now, Dow, similar picture. So we can now fast forward a bit. So here we go. Dow did close the month red. So things like names like Boeing and some of the industrials did not help this index, but we're still momentum up on the monthly. Okay, so outside up, broadening formation here, coming back into the range again. Now we want to be seeing like we saw the other indices. Can we break below the prior month's low. Weekly chart, momentum got extinguished, and this is what I want to draw to your attention. So here, so it goes this week. Remember, we drew last week was an inside bar. The question was, which way does it break? It broke to the downside. A very, very clear break for that matter. And so this tells us, right? So we had momentum up condition. Last week, it was still momentum up, but it was an inside bar, meaning we could not break above the prior week's ranges or below the prior week's ranges. And so this type of price action here is very, very important to see, especially at relative tops, because just think about the trading psychology that's happening here. Okay, so if you're involved in a move like this and you're leveraged and you're buying Dow stocks and Dow names and you expect things to go higher, this week is a situation where stocks are not going anywhere because it's an inside bar, right? So the majority of stocks are either slightly up, slightly down, but on average they're not going anywhere because they're, by definition, they're inside the range. And usually when you have inside bars like this, especially at relative highs, it can oftentimes indicate a topping pattern, because the psychology of the traders who are actually trading this is that on the way up, they're used to making money because up until this point, price is actually moving along quite swimmingly well, right? Until here, all of a sudden, you're expecting new highs, a price goes nowhere. And it causes some frustration in traders, and some traders will try to get those gains by increasing their leverage. And so markets have a very, very fine way of retracing on these traders and correcting and creating pullbacks when people are the most leveraged. And usually when you see that, these inside bars like that, that's off, especially after a large run up, there's a pause, then people tend to get a little bit over leveraged as they try to push the mojo a little bit more and unable to do so. Then any kind of break will cause these over leveraged traders, right, to get stopped out. They have to get out because they put on too much leverage. So this is the worst case scenario for anyone who's over leveraged, is you get a gap down on Monday, right? So here you're hoping things keep going up, right? Because you did the Bollinger Band walk on the daily, right? We say the Bollinger Band walk. It has to keep going. It did not. This, 2 weeks ago, it stopped doing that. It went down and then it consolidated sideways a bit. Friday was a bit shaky last week, but still enough that it was still an inside week. It was still inside of the prior week's range. But then, that's the worst case scenario for the guys who are overextended. Gaps down. We know the story now. Pull back into the prior week's low and then continuation of the sell. So the Dow is certainly a lot cleaner than the SPY and the Qs for that matter, well, especially the Qs. But that's that's exactly the same pattern that you'll see on the Russell. So the Russell now, and I've gotten that story out of the way. Same thing. We don't have the momentum up situation on the Russell on the monthly chart, so it has not been trading momentum up, but hit the top of that broadening formation. The question was, does it break above that broadening formation, or does that end up being resistance? And right now it's looking like it's acting as resistance. So now I want to see, can we create a monthly reversal and come back to this range? Because I warned a couple of weeks ago, right? I said I'm always wary when the Russell's leading, because if you recall, it was this is that week ago when the Russell was making these highs and the rest of the indices were not doing as well. And this is typically a trap, right? This is typically a trap. When you see the Russell outperforming late in the cycle, it's usually a trap. For whatever reason, people start to gravitate towards these smaller cap names, the high beta names, these high flyers, these ones that move big. They're trying to get the returns we talked about, right? So they start taking on more risk. This is the form of leverage, right? They start jumping into names that are a little bit riskier because they know that's supposed to be juiced and give them better returns because they're not getting it in the slower indices. And when you got an inside bar like this that happened last week, we drew the ranges, right? You want to know what's the next bar, and we know the story now. It went inside bar and down on the week, and so that was the warning shot right here when we had the Russell leading 3 weeks ago. That was a red flag, and I did bring that up because I've seen that countless of times. So now we have that one more example of it to add to our playbook for things to watch out for. Because look at that week. This is 3 weeks ago, right there. Look at the Russell trading above the Bollinger Bands, right? It's gapping up above the Bollinger Bands, right? And it gapped up again. So this is the Friday. Recall, it gaps up on Thursday, it gaps up on Friday. This is deep in the Bollinger Bands here, right? So it fades, and that's the end. That ends up being the top of this cycle here. Boom, the downside. And so this past week, same story, right? Outside bar down, pull back, and then all the way down now. So let's see how that continues to play out on the 2-day chart. We got some momentum going on here already. So the Russell's been the weakest now out of all the indices, right? So before it has shown some relative strength, right, on that, especially on this week here when it gapped up. But now on the 2-day, we got an outside bar and down. So that's already in play. Outside bar and down, momentum to the downside on that 2-day chart. Okay. Inside week there on the Russell, so that resolved the downside. Let's see if there's continuation or not for that Russell move, because the 2-day showing momentum and the 4-hour also showing momentum right there. Okay, so just seeing if there's anything else I want to add to that discussion there. All right, so let's keep moving on. So here, Russell. Actually, there is not a outside bar down situation here. It was here, yeah. So that's the going into Wednesday. So you can see here, Wednesday, outside bar down, and we have the outside bar down situation. So it's still in play. It started back on Wednesday. It didn't start on a Friday. It started on Wednesday. So this is actually quite nice. This is the weakest of the indices, like I said already. It pulls up. It goes inside outside, so anyone who gets who's buying this move to the upside got stopped out, and then they push it down right away. And then we had that gap up on Thursday, right? Not the gap up, but the strong buying to close Thursday. But look at that, it wasn't even strong enough to break above the prior bar's high, inside bar, and then resolves to the downside on Friday. Boom. Okay, so there's your break now. So that's a momentum move on the 4-hour chart. Let's see how long that continues. You need to see a break above the prior 4-hour bar's high to extinguish that 4-hour momentum. Okay, but for now, for Russell to really exhibit strength, this is what you need to see. If somehow in the first week of February you can go inside bar down and break above this prior week's low, as high, that'll be an inside bar reversal back to the upside. So if the buyers are very, very strong and they can somehow break price back above this past week's high, anyone who got short down here, they're going to get stopped out. Okay, so that's what you want to be watching for. If you're a buyer, it's like, okay, if you want to buy, is can they take out this prior week's high? It may not happen in one single week. It may be something where it takes another week, goes it comes back down, comes back up, and then eventually tests that area. But once it comes back through here, these guys up here have to watch out for their stops. Let's go TSX now. TSX. Okay, so TSX closes the month green, so a nice strong month for TSX. Although came back in, we saw some supply coming here, so up 1.5%. Not bad move. And then we did break below the prior week's low. So there is your reversal, hitting that broadening formation right now, touching the broadening formation high. There's your pullback. Now watching the ranges. Okay. Now on the TSX, so on the 2-day chart, let's do the 2-day chart. You got momentum now. Okay, so went inside bar and down. Okay, so inside bar, that's how it resolved to the downside. And on the daily chart on Wednesday, it gave you the sell signal. Okay, so we know what happened there. It's an inside, went outside bar down, broke below the prior week's lows, tests it up here, right? And then there's your reversal. The nice thing with the TSX here is it actually did a nice little gap fade, right? So I think I didn't show the other ones, but here it actually did gap fade. So it gaps up here, fades into this range, and there's your sell signal. Back down through the range again. Let's keep moving. Emerging markets. This has been a great index to watch to really see. This is kind of the risk on, risk off chart. Is we're watching to see how the emerging markets are doing, because pretty much we're tracking very, very closely intraday with, not intraday, but the majority of the indices. If you see EM gap up or gap down, then usually that's going to be the a pretty good indication what the North American equities markets are going to be doing for that day. And so this past month we started off green, right? We had a strong momentum move to the upside, but look what happened here. It came right back through the other side, right back through. So now outside, and look what that looks like. It's a big old broadening formation, right? So that's what we're seeing here now. Potential is this thing to come back through the range and potentially come all the way back out through the other side. So see a number of gaps filled, but look at the size. And this, unfortunately, is not right data. So I'm looking at TradingView, and my my other charting platform doesn't show this large shadow here, so I think it's just incorrect data, because my IQ feed is not showing that on my other charting tools. But you did have a week that did have continuation. So the prior week we showed the reversal, right? Up, down, reversal. And now this week was continuation, a gap down. So these EM markets were gapping down like 2% every day, and so yeah, or 1.5%, 2% a day, and you knew that was that the emerging markets were getting really hit hard. So that's what you're seeing now, is that you have a broad information happening here on the monthly chart. Weekly chart, we had that reversal already, continuation now. And on the daily chart, just like we saw with the equities, right? So here, gaps down, up, and then reversal here. Hard to get short there because it gaps down. So it's anyone who buys this, they're gonna get squeezed. So you can't have to get out there. It's a tough trade to be in if you're long, because now you have to cover. But unfortunately, it's going against you quickly. Okay, so that is the situation there. So essentially, if you think about this, and if I look at my other charting platform, this bar is incorrect. So this should not be a large wide candle like this. Okay, it's rather, if you just think of it this way, let's think of it in like in 2 bar segments. Okay, so these 2 bars, if you were to think of them as 1 bar, that'd be a 2-day chart, right? So these 2 bars, this thing shouldn't be up here. This should be a large bar. Okay, now this bar and this bar, if you put them together, that's actually an outside bar, right? Because these 2 bars together are outside the ranges of these 2 bars. Now, I'm telling you this because this bar is not correct. This should just be a normal green bar without a big shadow. You put these 2 bars together, it's a green bar, right? You put these 2 bars together, it's an outside bar that goes to the downside. So long story short, this is a momentum move to the downside. Outside bar down on the 2-day chart. You don't see it on this daily chart, but that's what it is because of this incorrect data here. So it's an up bar, green bar, outside bar, and then down. So momentum to the downside now on EM. You want to see if that momentum continues, especially now that we have momentum on the month potentially, right? We're closing near the lows of the month there. So does it go monthly and down in February? That's what you want to be looking for. That means you have potentially more range to reclaim here to the downside. So if it's going to be a risk off environment, things like TLT will outperform, right? And that's what it's been doing. If you recall, last several months we've been talking about the inside bar reversal pattern on the monthly chart. Now it's really kicking in. Look, inside bar down and up. That's the pivot there. Didn't quite do it on Friday. Came very close. Everyone's going after that pivot right there. 146.03 got to 145.99. So within 4 cents of taking out that pivot, expect that pivot to get taken out. Okay. So on the weekly chart, it's momentum and up on the weekly, right? Outside bar up, momentum. Need to see this low get taken out before that momentum will get extinguished. As easy as that. Now, so the TLT is your 20-year plus Treasury bond ETF. Now let's look at the 10-year, the IEF. I said the shorter term Treasury, so 7 to 10 year. Here on the monthly, inside bar down, inside bar, so inside bar reversal, and it did take out that pivot high, right? So that pivot high was 113.89, and that high was 114.12. So that's exact same pattern on the 7-10 year as you see on the 20 year. 20 plus year on TLT, right? TLT just hasn't done it yet, but expect that pivot high to get taken out sooner than later. How about gold now? So, risk off environment, gold's gonna like that, and it sure does. So let's go to the gold futures here. I'm looking at the micro gold futures chart, which I've been trading more of now, and I'm liking it. So nice green month for micro gold futures, or gold in general, up 4.25%. Closes the month out strong. Again, it reversed here in January. Went down in December, reversal in January, now to the upside. Now you want to just see, can they ever take out the prior month's low? So this past week, the prior week, right, we did go weekly reversal. We had that big shooting star. We talked about that shooting star already. What can happen after shooting star? it did break below that shooting stars low. Recall, they bought back right away. So this is what you typically see. If there's going to be excess selling on the upside, if it doesn't fall apart, you're going to sometimes see some strong buying to counter this excessive selling. So you got that counter, shooting star with a hammer, bullish hammer, then continuation and continuation. Okay, so this week we broke above the prior week's high, right? And so there's your breakout pullback scenario, right? So here's your prior week's high. Here's your purple line. Okay, breaks up, pulls back, and then once you break back above that area again, you're back in the trade, and it's an outside bar to close the week. So outside bar now to close on a Friday. Yeah, let's see how that opens. Again, people are small. You know, there's a bit of panic going on now. People are definitely the fear factor has popped up. So let's see how how traders open the markets on Monday or Sunday night, especially with the futures products. So I myself did take a position in gold just the last minute on Friday afternoon. So right now we're momentum and up on the 2-day already. It's momentum and up. On the daily chart, it's an outside bar. I don't really like this as much just because it's going outside bar into the Bollinger Bands. You have to keep going. If it doesn't, you're going to pull back. And any short-term people will probably get stopped out, myself included, if that happens, which I want to take that risk. So on the 60-minute chart, very simple pattern right there. Okay. Inside bar and down. Inside bar reversal right there. 1590.08. 1590.8, I mean. And then we have that continuation move to close near the highs of the day of Friday. I want to see now how we open on Monday, expecting a bit of panic to open things up on Monday, which will allow for hopefully a good place to cover. All right, so there's your gold chart. Okay, one final instrument to talk about in terms of our regular review, and that is the Bitcoin. So the digital gold, pull the Bitcoin chart. If you recall last week, I said that Bitcoin had been taking a bit of a nap, but we're back in the game again. So January ends up being a very, very good month for Bitcoin. So here, big green month that reversed the prior selling, right? So now we're coming back up to the range, and we had a good 30% return or 30% move for Bitcoin in the month of January. February, green month so far. This is the first day of February on Saturday, and it's currently an inside month. See where it goes from there. Recall last week I talked about how Bitcoin was taking a bit of a week off because we had that inside bar. So the question was, which way do they break it? And they broke it to the upside. So easy move from here to there. They broke that, and then it's now an inside bar in up condition on Bitcoin. On the 2-day chart on Bitcoin, it looks like this. So it goes like this, right? So here is the prior week's high, right? So sorry, I'm just going to redraw this here really quickly so as not to confuse ourselves. Okay, so there's the prior week's high. So we pull back down, right? And there's the prior week's high, this bar right there. And it goes inside bar down, inside bar reversal. So there's your same inside bar reversal, inside bar down, inside bar reversal. And because this is an outside bar, you can expect the high to get taken out. And that's what happened here on Monday. It all happened on Monday. Is that correct? The 27th is a Monday? Yeah, or the first 2 days of the trading week. So there's Monday and Tuesday because these are 2-day bars. So there's your outside bar, inside bar, down, inside bar. That means anyone who's got short here, there is a stalemate. And then as soon as you break above there, they're going back up again into those pivots. They took out everyone there, and now it's still climbing up. Now we got a bit of consolidation. So this is going to be interesting to see how it breaks this consolidation, because on the daily chart you have this now, outside, inside, inside. Okay, so we have a new week coming up. So there's a new month already, so that's why the orange line is there. We got a new week coming up on Sunday night at 7 p.m. Eastern. So what happens, right? Ideally, the best buying scenario would be it breaks to the downside and comes back up again. Why is that the best? Because you want to take out any week longs, stop them out first, so maybe take them down here, and then pop back up again. Now, if you're long Bitcoin and you're like, okay, when do I get out? Well, right now, what you don't want to see in Bitcoin if you're long is you do not want to see this prior low right here get taken out. So if somehow the sellers can step up and come back through this past week's range, so it's up 9% this week. So if they can come back in here now and take out the prior week's lows, that will form the inside bar reversal to the downside, and that will alleviate, you know, this setup, this signal that popped it up. So anyone who got long this sequence, if this low gets taken out, then they're going to come after that pivot, and that'll stop anyone in that sequence who got long. So that's kind of your line in the sand for these if you're a weekly trader, and that's the time frame you're working on. That's what you do not want to see. Okay, on the Bitcoin chart. So just one final big piece of context for the Bitcoin chart, and that's this: where can it go if it keeps going the way it's going? Possible inside bar down, reversal back to the upside here to take out that pivot high. High of 13,174, back into the 13,000s. If we can break above Q4's highs, this high here is 10,480. If we break back above 10,480, we're coming back up here to 13,174. That's a really good level to go after if we can break above Q4's highs. Okay, so with that being said, I'm going to do a number of fast fire charts here now before we wrap things up. I've gone a little bit long today as I wanted to help you see the price action so that you can better see it in real time. That's the whole point of these video series, that the more repetition, the better you're going to get at discerning this stuff in real time. That's the name of the game. One thing to do it when the markets are closed, but obviously the trick is to do it when the markets are open. So let's talk about some names that are setting up here on the monthly chart, because we got a new month, right? So Net, Cloudflare, chop, 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 chop. But now 2 inside months in a row. How do we break this consolidation? Because that was the big IPO, right? Net, Cloudflare, big internet name. Basically the plumbing of the internet. Let's see how it breaks this. Let me redraw this level here. How we break that low? Okay, that low, or that low, or that high. Excuse me. So it doesn't have to be that low or that high. It has to be one. We don't care which side it is. We want to see which way it's going to break. So I'm gonna try to grab this guy here. You get the idea. Okay, let me just clone that. Okay, so let's talk about the next name now. Sorry, I'm just going to quickly draw this in. EXPE. Okay, so Expedia. So inside on the month. We do have earnings here on the on February the 3rd, but we still have we still have a couple of days left. So I'm not saying get in the trade before that, because earnings is actually no, we don't have earnings until the 13th. Excuse me. So you have to watch out for earnings, but you do have that double, inside month, and currently an inside month are January and December. Which way does it break? That'll be interesting to see that, because maybe it's the earnings that causes it to break, but we were consolidating and expect something to happen after that. Okay, SMH. Okay, SMH here, a little bit more bear signal, right? We're leaving a big red bar here now, outside bar and up. If we break below this prior month's low, there is your reversal that extinguishes the momentum, possibly taking semis back to the range. APA, man, have the oil stocks been getting hit or what? So here's Apache, same situation, outside bar and up, momentum will get extinguished right there. Once that low gets taken out, we'll come back to the range, right back to these recent lows. And Fast, okay, Fastenal, outside inside on the monthly chart. Which way does it break? Earnings sometime in April. So now you want to see which way it breaks on that outside inside pattern on the monthly chart, because that will be significant whichever way it breaks. Now let's talk about some of the high flyers, and then we'll talk about some of the dogs. So here are some of the really nice looking names based upon a modified Sharpe ratio. AYX, okay, going right into highs. What sell off, right? This software company is not feeling the pain at all, on a roll so far. A bit of pullback here, but nothing seems to be holding this stock back right now. AEP, utilities name. We talked about utilities last week, how strong they look. Look at AEP. Again, people chasing yield, liking AEP. Let's talk about RNG. So I think I brought this one up recently, but look at RNG now, going right into highs, right? The reason that is because this move here, outside, inside on the monthly chart, it resolved to the upside. See, outside, inside to the upside, and that creates that monthly move. Okay, Tesla, is that a good looking chart? Yes, it's a good looking chart. So it's still going, right? So Friday, what's selling? It's going, looks like it's trying to do the 1,000 roll, right? I'm just talking about $1,000 Tesla. Let's see if it gets there this year. And the final one, Twilo, in terms of a star, or Twilio, excuse me, TWLO. So again, red day on Friday. It did come back, it did gap up and come back in the range, so a bit bearish there. But look at the monthly pattern. Okay, inside month and up. Okay, so inside month and up. This chart here is it's looking a little rough here. Let's see if I can turn off some of the, there you go. Inside month and up, coming back up to the range, causing total to be a pretty good trade for the past couple of months. Now let's talk about some of the dogs. So, man, you do not want to be in steel companies. Okay, so the steel companies. No, yeah, if you're looking for steel companies, this is either continuation or potentially reversal trade. But as of late, the steel companies have been getting crushed. So all the steel companies, AA, Nucor, X, the exposure to China has not been doing any favors. So right now, a lot of headwinds for steel companies, industrial names. That means XME is also looking rough. So the metals and mining ETF going right, look at that. Look at the vaults. Look at the momentum move to the downside here on XME. Oil names also getting, really hammered. Look at something like Phillips. Wow, look at the selling on Friday, right? That is down 5%, and look at the trend is actually steepening there. So maybe you get to a point where it's going to reverse because it's getting a little bit extended. But look at the XLE before you decide you want to take any long-term trades here, because XLE is also looking pretty rough. Look, we just took out December's lows there. So December's of 2018, that is. So they have to go back to, remember, that really rough patch that we had at the end of 2018. We broke below that this past Friday. So looking pretty rough there on the XLE. That means you're going to see the same thing on OIH, right? So OIH, yikes. Breaking right in those lows, right below those prior lows. Let's take it out a bit. So the oil has been really getting crushed. Again, not bad for gas prices, but you do know, owning these companies, having that in your portfolio, yikes, do not want to be in there. Not until it bottoms. Okay. So one final thing to look at here, and that is a name like Chesapeake. Man, remember Chesapeake was actually a good company? Seems like a long time ago, right? So look, at one point Chesapeake back in 2008 was trading at $67, nearly $70. Unfortunately, their CEO passed away, and things have not gotten any better. And now they're trading at 51 cents. So outside, inside, and down on the monthly chart. Doesn't help that oil prices or natural gas prices are going into lows like this either. So on the natural gas price is boom to the downside. One file name, as I mentioned already, Goose. Want to see how this one trades this on Friday, because we have earnings right there, the 13th. And here's the chart pattern that I've been watching: outside, inside, and down the month. That's this is the break that this is the break that caused the monthly charts to really break down. Outside, inside, and down. That was all the way, right there. So outside, inside, and down. That level was way up here. Okay. So notice this here. So that's your December lows. Breaks down, pulls back up. You get a couple of selling opportunities up here, and then breaks back down again to recent lows. So now want to see how Goose responds in terms of the earnings, and see if this is in fact a broken stock, or just some I guess recent intermediate weakness. Okay, so I hope that this video helps. It was a bit of a long one, so I apologize for how long it went today. But as always, if you have any questions, please feel free to leave them either on the blog site at thetradingedge.org or on our YouTube channel. I do check the comments. If you really like the videos, please subscribe so that you can get a little notification as soon as they're published via our website or via YouTube. And always feel free to share these videos to other traders so that we can grow the community and so people can get a better understanding of price action, so you can stop doing the wrong things and hopefully improve your trading. And finally, I just want to wish everyone a good trading week. Expect more volatility, and that could be persistent for a while. There's no reason to believe right now that the coronavirus situation is wrapping up anytime soon. We have a lot of earnings risk out there, so continue to watch the earnings names that you're trading to make sure that you're not taking any excessive risk. Wish you a great trading week, and we'll talk to you again next week. All the best.